A very good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines. A lot of global macro cues that we are watching out for, which will impact our own markets as well. And that is something we'll be discussing. But first up, as always, let's take a look at what the Asian markets are doing. Largely higher in trade. Remember, US markets surged overnight after commentary coming in from Fed Chair Jerome Powell, where he said that yes, there could be rate hikes, but they will be smaller than what is expected. And on the back of which we are seeing Hang Seng up 2.5%, the Taiwanese index is up 1.6%, and across the Asian screen, it's quite green actually. Shanghai is up 1%, Nikkei up 1.1%. European markets also closed higher, and as a result of all of this, the SGX Nifty is indicating that the start of for our own markets could be very strong. So it's 74-point uptick that this particular index is suggesting, very close to that 19,000 mark at 18,990. So let's see whether we see that 19,000 number on the Nifty today or not. Let's talk about the US markets now. Broad-based rally on Wall Street following Fed Chair Jerome Powell's remarks confirming that the central bank will slow the pace of its rate hikes as soon as this month. The Dow Jones surged over 700 points, the S&P gained over 3%, and the Nasdaq Composite closed over 4% higher. In fact, let us listen into what Fed Chair Jerome Powell said last evening at the Brookings Institution. Listen in.
Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done.
Okay, let's also listen into some reactions from Fed Chairman Powell's speech from former Fed Reserve Governor Randy Kroszner.
Inflation rate down without having the unemployment rate go up very much. We've never done that before. I don't want to say it's impossible, but I wouldn't say it's very likely. I do think the labor market at some point will crack. And basically, Powell kind of said that. Jay said we really need to see some of the heat come out of the labor market. So I think they've been very optimistic to say that peak unemployment rate is going to be no more than 4.4%. I think much like I very much agree with Steve that I think the Fed is going to end at with a 5 handle on interest rates, and I think the unemployment rate is going to be above 5%. I mean, we're starting to see some come down and step down in rents, but the way we calculate the housing services part of the inflation indices, it has a lag in it. So it's looking at not only rents today, but also rents that have been negotiated over the last few months. So that's going to take a while to come down. And we've seen a lot of pressure in the services sector because there's such a hot labor market. And it's going to be a while before the wage rates start to come down. So that's why I think it'd probably be most of 2023 before we see inflation starting to come down, but for something that Mr. Putin might do or some other geopolitical shock. So I'm putting those aside for the moment, but obviously there's a risk that something could go wrong somewhere in the world.
Okay, moving on to the final update on our global market wrap this morning. Positive handover from the European markets as well, with the French CAC up 1%, the German DAX up 41 points, and the British FTSE closing with a 61-point gain. However, the big cue from Europe has to be the Eurozone inflation print, which dropped more than expected for the month of November, fueling hopes that maybe record high price growth could have finally peaked. Headline inflation grew 10% year-on-year, down from 10.6% in October and comfortably below the consensus projection of 10.4%. Energy prices reported a noticeable drop to 34.9% in November compared to 41.5% in October, even as food inflation continued to accelerate. And before we head to our domestic cues as we usually do, stay tuned for an exclusive interview later on the show. Former FTX CEO Sam Bankman-Fried admits to not upholding his responsibilities but says that he never tried to commit fraud on anyone. Excerpts from his interview with CNBC follow in a short while. And that's all the global market action. How will these overnight cues impact our own markets? We have a research team, as always, to prep us up for just that. The market setup, the stocks that are likely to be in the news, and the action from the FNO space as well. Hey guys, a very good morning to all of you. Vivek, looks like a good start for our own markets today.
Well, absolutely. Good morning. It's a sea of green, and markets will hope that this particular trend continues. Indian markets are trading near the lifetime high. Just to reiterate what you had mentioned a little earlier, most of the US markets ended strongly in the green, second consecutive month where you actually saw strong end as far as November was concerned as well. European markets too ended higher, clearly indicating the risk-on rally. When you're talking about gold prices too jumped up over 1% in yesterday's trading session. And when you're talking about Brent as well as crude oil futures, that also gained quite significantly in yesterday's trade. Brent futures in yesterday's trading session was up almost 2.8%, while crude futures, WTI crude futures, were up 3% in yesterday's trading session. Now, coming closer to the Indian markets, remember, in yesterday's trading session, markets continued to trade at the fresh lifetime high, and this particular rally was accelerated in the last half hour of the trading session due to the MSE rebalancing inflows that India actually enjoyed. On top of that, some slight caution in terms of the data that came in yesterday in terms of the Q2 GDP as well as manufacturing. Manufacturing and core sector data actually indicated a moderate slowdown. However, the services growth remained healthy. Asian markets continue to trade quite higher on the back of the strong global handover, and SGX Nifty 2 is indicating a gap of start. So clearly, we continue to trade at lifetime highs.
We do actually, yes, very close to that 19,000 mark. Vivek, thank you so much for all those cues. Over to Surbhi now. A lot of stocks in focus today. Surbhi, take it away.
Hi, thanks for that. I have a few stocks on my radar today. The first one is Shilpa Medicare, where its Telangana unit facility gets Health Canada GMP approval. GMP is good manufacturing practices. Now, this approval will allow the company for commercial distribution of production in Canada and will also enable to file new application submissions to Health Canada. Next is Tamil Nadu Mercantile Bank, where the bank has been authorized by RBI for undertaking government business on behalf of RBI. Next is Apollo Hospitals, where the board has approved the issue of 1,050 NCDs aggregating to rupees 105 crores. KPI Green Energy, where the board has approved 1:1 bonus issue. And lastly, Sanghi Industries, the board is expected to meet on 3rd December to evaluate a proposal of a fundraise.
All right, so all these stocks in news today. Let me go across to Manglam finally, joining in with the cues from the FNO space. Hey, Manglam.
Good morning. So there were fireworks in yesterday's trading session across Wall Street, but a large part of it also, something that we preempted, because if you just take a look at the way the Nifty moved, in the last hour, after being a drab for most of the day, in the last hour, it perked up and ended at the high point of trade. Yet another record high for that index, and as you can see, it was also short covering that led to the further expansion that we saw on the upside for our markets. In terms of cash markets, the FIIs went ahead and bought 9,000 crores, one of the largest numbers that we've seen in recent times, and that's primarily on account of the MSCI index rebalancing as well, and that was something that we saw in the way gross volumes for the FIIs perked up. But that's not all. In index futures, the FIIs covered a fair amount of shorts, and they also did that in index calls. So just take a look at the way the index futures move. We had around 4,500 short contracts being covered, 7,000 long contracts being added, and as a result of which FIIs who were already net long have only inched their longs higher to around 75%. But the biggest positive came in on the index options front, and this is important because today is weekly options expiry. 81,000 short contracts on the call side were actually unwound. People were feeling the heat out there, and at the same time we saw 118,000 puts being written. So that's telling you there is a strong amount of support at lower levels as well. What were the calls that unwound and saw a lot of short covering? 18,600 call as well as 18,700 call. These two strikes were extremely active on the short side. Once the market moved higher, these writers actually began to feel the heat. 18,700 put saw a fair amount of writing, so that's telling you 18,600 to 650 will be an important support. And we also saw some writing at 18,800 put. So important to see if the SGX Nifty led gap up sustains or not, because it is weekly options expiry today. Ahead of that, we also saw FIIs buy some puts, perhaps only on account of some security. The only thing to watch out for as the market expands is the put-call ratio, which is now moved to 1.55. Usually it indicates overheat zones, but need not necessarily be bad so long as the market continues to move higher. Just a data point to keep on your radar.
We will. Mangalam, Surbhi and Vivek, thank you so much for joining us, taking us through what to expect from this day today and expected to be a strong open for our own markets. For now, we'll slip into a break. Up next, India's GDP growth slows to 6.3% in the second quarter. We'll get you all the details you need after. Well, on to some important macro updates which we were expecting last evening. India's GDP grew at 6.3% in the second quarter. This is largely in line with the CNBC-TV18 poll, which had predicted a growth of 6.4%. However, it is slower than the pace of growth in the same quarter last year. Lata Venkatesh is here with more details and her take on this one. Lata?
Well, the 6.3% is in line and therefore it will not be a disappointment. It will not be exhilaration either. What's positive about the numbers? Agriculture has done extremely well at 4.3%. The number on the street, the average expectation was 3.2. So it's done much better. Now, there are worries that it could be a give back for the subsequent, that is the October, November, December quarter. The damage of the late rains, etc., can be negative. But for the moment, that is the surprise, positive element. Manufacturing has clearly been way more disappointing than what the street was expecting. The street was expecting a flat performance. It's come in at -4%. That's serious. Services have made up. But, you know, the overall disappointment comes from the fact that the GVA, gross value added, has grown by only 5.6%. Most people were expecting a 5.9% growth. Now, GVA plus taxes minus subsidies gives you GDP. So it's probably good tax collection like GST, which has made for the good GDP number. But the underlying economic activity may not be as good as the GDP number is suggesting. Of course, these are provisional numbers. On the expenditure side, the consumption is very good, up 10% year on year, and so is capital formation, which gross fixed capital formation rising by 10.3% is very good. Government has been a poor consumer. Government has consumed 4% less than what it did in the same quarter last year. But all these could change with a lot of money going to state governments. Maybe in the second half, we could see the government emerging as a good consumer. The biggest drag on the expenditure front is that imports are far higher than exports. So what you call net exports is a big drag on the GDP from the expenditure side. That's another negative. But putting all the pluses and minuses together, coming in at 6.3, most people are betting that the full year number will be 7% as the Reserve Bank expected. And with the growth also coming in as RBI expected, chances are that the Reserve Bank will go with a smaller 35 basis point hike in December compared to the 50 basis hikes that it was giving in the previous policies.
Okay, Lata, thank you so much for making sense of those numbers that we got last evening. Let's also hear out what Chief Economic Advisor Anant Nageshwaran had to say after the GDP numbers were announced.
Overall, real GDP growth in 22-23 is on track to be at the range of between 6.8 to 7%, and IMF maintains 6.8, RBI maintains 7%. And I think the more important thing is if you look at the festival sales, if you look at the bank credit growth, if you look at the purchasing managers indices, whether it is services or manufacturing or the composite outlook, the economy has maintained its momentum, especially, I reiterate, in the face of very strong global headwinds and uncertainties.
Okay, that was all about the macros. Now from macro data to some national developments now. 89 constituencies go to polls in the first phase of elections in the state of Gujarat today. Key constituencies include cities like Bhuj, the site of the tragic bridge collapse Morbi, Rajkot, Jamnagar, Porbandar, Bhavnagar and Surat. Voting is scheduled to begin at 8 a.m. and end at 5:30 p.m. The state, which has been a bastion of the ruling Bharatiya Janata Party, is all set to see a three-cornered battle between the BJP, Congress and the Aam Aadmi Party. Welcome back. You're still tuned into Power Breakfast and it's time to talk all about commodities. Manisha Gupta is joining us with all that update. Hey Manisha, good morning.
Morning, Sonal, and what a night it has been. Almost everything jumping on the higher side after the U.S. Fed Chair Powell indicates a smaller rate increase ahead. The U.S. dollar has declined versus the major currencies after that, and with positive cues coming in from China as well, where the demand expectations are coming in strong now, is supportive for commodities as well. So all industrial commodities, precious metals, all of that surged higher. The crude oil prices were gaining also because the U.S. inventories dropped by a big 12.6 million barrels. So the crude oil prices gained up by 3% overnight, and the markets now will watch out for the OPEC Plus meeting on December 4th, which is now expected to be a virtual meeting and not an in-person meeting. So that tells you that there's going to be not a very big change coming in. OPEC may just continue about cutting output as they have decided for the month of November and December as well, and that seems to be supportive for prices as well. So while the OPEC October shortfall was 1.36 million barrels per day, the November shortfall is seen even higher, and the markets are taking support from that.
Okay, all right. So a lot of buoyancy in the commodity markets as well. Equity markets expected to open higher as well. Manisha, thank you so much for all those updates. It's time to shift focus to the crypto universe now. In his first public appearance after the crypto platform FTX filed for bankruptcy, former FTX CEO Sam Bankman-Fried said he did not do a good job at upholding his responsibilities. He spoke to CNBC's Andrew Ross-Sorkin at the New York Times Deal Book Summit. Listen into excerpts from that conversation.
And at the end of the day, I was CEO of FTX. And that means whatever happened, wherever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators in the world to do right by them, to make sure the right things happened at the company. And clearly, I didn't do a good job of that. Clearly, I made a lot of mistakes or things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month, and reconstructing it. Where are there things I wish I had done differently? I didn't knowingly commingle funds, and again, one piece of this, you have the margin trading. You have customers borrowing from each other. Alameda is one of those. I was frankly surprised by how big Alameda's position was, which points to another failure of oversight on my part, and failure to appoint someone to be chiefly in charge of that. But I wasn't trying to commingle funds.
Okay, I was not trying to commit a fraud. That's the word coming in from former FTX founder. But with that, let's quickly take a look at the Asian markets. Higher in trade today, SGX Nifty is indicating a strong start for our own market. So we'll keep tracking that for you. For now, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.